And just like that, we're back for another Bitcoin video. In today's video, though, we're going to be taking a look at the Wyckoff accumulation pattern. This is something that the community were asking for and just kind of talking about a little bit in our Discord server. And so I figured, why not go ahead? Let's take a look at the Wyckoff accumulation pattern. And we're going to try to take a look at this through the most bullish lens I possibly can see, and then see if it fits. Okay, and we'll take it from there. As I get into the video, if you find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at 𝗕𝗘𝗪𝗏. If you haven't yet joined us in Discord, what you're waiting for, check it out. Link is in the description down below. Let's start this thing, right? So there are two schematics when it comes to the accumulation pattern, pattern 1 and pattern 2. Pattern 1 will have a spring event in a phase C, and pattern 2 does not. Okay, and because the whole Wyckoff accumulation pattern essentially is a pattern that maps out manipulation, you got to understand, yes, there's obviously going to be two variations to this. One that takes you down lower and one that doesn't take you down lower. This is because the people behind the Wyckoff accumulation pattern, the smart money, the big funds that are making it play out, they are going wherever the money is, okay, and therefore they're going to trade against the majority, okay, which would be typically the retail investors. So there's two patterns, and you won't really know exactly which one is going to happen until you get into kind of like late phase B and into phase C, okay? But for the most part, phase A and phase B are pretty much identical, with the exception of the last part of phase B and phase C. Phase D and E remain the same as well. So it's really just the end of phase B and phase C that's the difference between schematic 1 and schematic 2. Okay, so now we have an idea. Okay, well, we've got Wyckoff accumulation pattern. What is it that we look for? Well, let me go ahead and just make this a little bit bigger so you can be a little bit more familiar, right? We can see that we have this move to the downside. We can see here we have the preliminary seller support to be found just at the top here. We can come back down to the selling climax, an automatic rally. Then we have a secondary test in phase A. Then we move up just above the automatic rally where we find the resistances. Then we come down into a secondary test of phase B. We then move back up to the automatic rally, and then we come down in this one here, down into a new low for the spring event, where it then tests the secondary test of phase B. We move up, and then of course we move out of the danger zones. We find support on the resistance lines, and then we move out into phase E. Okay, and we can kind of see that in here. So knowing that we have these things kind of mapped out a little bit, let's go ahead and see if we can get this to fit, and we're going to try to get it to fit in the most bullish way possible, right? So this here is obviously Bitcoin paired up with USDT. We're on the daily time frame, okay, and we can see we have a local high up here at $69,000. Okay, so we're going to start up here, right? If we're going to see this preliminary support to be found and then a move down into the secondary test, or sorry, selling climax of phase A, then we're going to have to see what's going on, right? So if we're coming down here and we find preliminary support, I'm going to think, looking at it from the most bullish way possible, that's going to have to be here at about $32,917, right? That's going to be the preliminary support, well, primary support, preliminary support. And I can go ahead and just add on here. If I can see it, I should have it right in here. Okay, so we have that one. Then we kind of move up a little bit, and then we come down into the selling climax. Okay, now the selling climax cannot be here, right here at $17,000, okay, because the selling climax will require us to have an automatic rally and a secondary test that stays above the selling climax. Here we can see a potential rally, but we come down lower than the selling climax, which means our selling climax has to be down here at the $15,476. Let's go ahead and tag that up with an AR. No, it's not an AR. An SC, okay, for selling climax. Now we can see that there's an automatic rally. We start to have this push to the upside, and we do come back down. So it looks like we might be able to see our automatic rally coming into around about here at the 25k range, which means we can then go ahead and throw in an automatic rally just there. Okay, then of course we push back down, and then we start to come on up again. And this is where the resistances are coming in. Now the resistances are more aligned to preliminary support. That puts us at $32,917. That's kind of where we're heading right now. Okay, so if we take a look at this and just kind of review what we've done here, is we've come down, we found preliminary support, we bounced, and then we fell down into a selling climax. The selling climax obviously is the lowest point before we have a significant run up towards preliminary support, okay, which is where we're heading right now. Automatic rally coming in at about 25k. We retraced down towards 19.5, and now we're pushing up towards that preliminary support again, okay, and looking at 32,917 to be the resistance lines. That means that essentially we have to move down, and we're looking for a secondary test in phase B. Now, secondary test in phase B happens to coincide both with schematic 1 and schematic 2. There's no differences between those, which means we are likely to see a new lower low under that kind of thought pattern. So again, I was trying to look at this in the most bullish way possible, and I've come to the conclusion that if we are following this pattern, that we're going to have to go down into a new lower low. So that's not quite going to work for the bulls. Let's see if we can find another way of trying to make this schematic fit that bullish narrative. Well, let's go ahead and remove these and try again. Okay, it's going to be a little bit of this because, you know, I want to make sure that I'm covering the basis of where all of this stuff goes. So if this is the case, then we're going to want to see an automatic rally and a test above that automatic rally. And there is one potential right up here. So let's go ahead and take a look at that. Let's assume that this is our preliminary support right here. So we'll go ahead and throw this in. And this is not going to be a perfect match at all, but we'll give it a good shot. Preliminary support to be found here. Okay, so if that's our first test, we bounced up, but then we came down into a selling climax. That would go right about here. So we'll go ahead and change that into a selling climax right here. Then have an automatic rally. Now this automatic rally goes up higher than the preliminary support. Then we chase and then we push up again. So again, not an ideal fit either, so it doesn't quite work here. So then we start thinking, well, okay, well, what is about down here? Is there something in this range that would also allow us to kind of look at this thing as maybe the secondary test in phase B being complete? And well, there doesn't seem to be a fit there either. So for the most part, I kind of start looking at this and I'm starting to think, well, maybe there isn't a bullish narrative to suit the Wyckoff accumulation pattern that actually fits without, you know, omitting certain rules or things you'd expect to see within the Wyckoff accumulation pattern. Of course, we could all just say down here is our spring event, and we could start with that as our bullish kind of standpoint. We can come down here, we can go ahead and we can throw in our spring. Do I have a spring event in here? Yeah, there we go, spring. So we'll assume that that's the spring event, right? So if that's the spring event, then where's the secondary test in phase B? That's going to have to be over here, right? So we're going to just work backwards from the spring event. So if we come here and we go ahead and add this as our secondary test in phase B, okay, so therefore we have those two principles in. That means that we're testing the area just here as our kind of resistances, and again we then start to lose the ability to look at it like that. Okay, so let's try to map this out so you can kind of see this low over here must then be our selling climax right here. Okay, so that, if I tag that up with an ST right in here, so SC, not T. Let's try that again. SC. Yeah, there we go. So that would be our selling climax, which would mean that up here would have to be our preliminary support. So let's go ahead and tag that in here. And therefore, we would have this little area here as our automatic rally, secondary test, and then resistances. Could fit, possibly. Basically, resistances coming in right up on that higher range. That's the wrong button. Let's try this one. So resistance is basically coming at 32,399, and then you'd have this as your automatic rally right in here. Again, not a good fit, and I'll show you why. So for this to kind of be playing out, then we should have basically moved up from our secondary test in phase B to test the automatic rally range, which obviously hasn't happened. We would have had to have gone up to 32k before coming down into the spring event, as you can kind of see on the schematic. Then of course we'd be pushing on up, right, and we'd see this move to the upside. So again, taking a look at it, it doesn't leave me in that conclusion that, you know, this is actually something that's playing out. It doesn't quite fit our expectations of a Wyckoff accumulation pattern. So if a Wyckoff pattern is to be playing out, how is it looking? Well, to me, I think we essentially are potentially yet to have the secondary test in phase B. I think that's really where this thing sits. So for example, down here would have to be our selling climax. So let's go ahead and throw this into our selling climax. Okay, and then over this side would be our preliminary, not here actually, it would be here. Yeah, right about here. This would be our preliminary support. We'll go ahead and put that into there. Okay, so preliminary support, we bounced up, we fell down into the selling climax. Now, obviously here it just looks like a straight line, but we actually have a couple of moves and it bounces to the downside. And then we, of course, move up into an automatic rally. And I think for the most part, that's probably where we actually had this recent high, right about here. Okay, oh, again, using the wrong button. Let's try again. So right here, this will put us on the automatic rally right here, okay, and meaning that we are likely to come up and test this 32,917 as our resistance line, which happens to fall in line with our preliminary support, meaning that we come down into a secondary test of phase B, okay, and again, even that under schematic 1 wouldn't be the bottom because we'd have another spring event potentially. Of course, we can follow schematic 2. So for the most part, I think if Wyckoff pattern, Wyckoff accumulation pattern is to be playing out, I think this is the way that we're looking at it. I don't think there's anything else, any other way of really applying it that's just following the expectations of the Wyckoff accumulation pattern on the daily time frame. And so, you know, I think it's loose at best. I think this is not really something that we are following. And again, there's not really like something you invalidate or something that you know, you look for very specific rules to say, look, this has happened, so it's no longer valid. I think essentially it's either happening or it's not happening. Because it's a manipulation pattern, a pattern that, you know, large funds are basically using to manipulate the price action of the market and to grab as much liquidity as possible. It's not something that really has a hard and fast rules about it, like this has to happen, and if it doesn't happen, then it's invalidated. It's more of a case that it is either happening or it's not happening. It's either people are actually enacting the accumulation pattern or they are not enacting the accumulation pattern. So for the most part, I'm not a big believer in the Wyckoff accumulation pattern here playing out. I think there's some other explanations as to kind of what is going on when it comes to BTC. Wyckoff is something that got a lot of popularity back in 2021 when we were in the Wyckoff distribution pattern. Got a lot of attention and it gets thrown around quite a bit between some of the influencers in the space across Twitter and YouTube and various other places like Twitch and whatever. But for the most part, it's not something that's really played out very well at all. I'd say that there's some interesting inaccuracies. Even when I'm trying to make this fit, it doesn't quite fit well enough to kind of make it feel like that's actually what is going on as well. But let me know what your thoughts are on the Wyckoff accumulation pattern down in the comments below. Interested to kind of get your thoughts and opinions. Obviously, lots of people have drawn it up lots of different ways, but ultimately I just try to be true to what the pattern should look like, and as you can kind of see in this video, it's a struggle to make it fit. So let me know what your thoughts are. If you found it useful, informative, smash the like button. If you're new to the channel, then why not go ahead and subscribe. Don't forget to join us in Discord, and guys, I'll catch you all in the next one.
We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.